Hi, welcome to the tutorial for this price and profit calculator for physical products. There's a version for digital products as well. They're both for sale at my Etsy store. That's Eagle and Pelican. If you've already purchased it, thank you so much. Really appreciate it. And I hope you learned a lot here. If you haven't seen it, you can check out links below in the description. But you'll probably still learn a lot about pricing and product development. This spreadsheet, along with the one on digital products, took me more than 40 hours to develop. And it's a tool that I wish I had had previously when developing products. The template starts with a setup page and then 6 steps after that: concept development, costs, pricing, budgeting for ads and marketing, pre-launch checklist, and a sheet for setting your launch goals and evaluating them against your actual sales and performance. If you've already bought this from my Etsy store, you can find it in the download section. If you haven't already downloaded it, you go to your account, click purchases and reviews, and then select download files. That'll get you a sheet that will have a link to the Google Sheets version, which is what we're going to be looking at today, or you'll download an Excel version directly. Okay, so we're going to run through this template and we're going to kind of pretend that we are running a bakery. It's a bakery that wants to start selling online goods. They're also already selling things in their store. And they also stock t-shirts for fans to buy either online or in the store. And through that, we can look at some of the features of how you run various products. Using this scenario will give us a good way to look at all the different variations that the tool offers. So before we get started, a couple quick important things. All of the colored cells are locked to editing. So if you try to change some editing and type something in, it'll give you this heads up message. So unless you know what you're doing, and really want to make that change, go ahead and here and hit cancel. If you do want to make changes, it's your spreadsheet now. If you bought it, you can go free and check this button here. Though, if you break it, you've already bought it, but I can't fix it for you if you break it. So anything with a color is protected. You're going to want to type in anything that has white you can type in and interact with. There's also a menu on the left-hand side. Feel free to navigate using this or the sheets below, kind of the traditional tabs below. So on the setup page, first you'll be answering 3 questions. Do you issue resale certificates to your vendors? So this is in states that have sales tax. And if you're going to resell something, you can send this so you don't have to pay the sales tax. Quick note, this sheet is optimized for the United States. I'm sure it will work fairly well for other scenarios, but it might not calculate VAT or other tax schemes quite as well. If there's a particular country you'd like edits for and make changes for, please, you can email me. It's help@eagleandpelican.com. So you'll check this box whether or not you use certificate. I am going to leave it unchecked so we can see how that works. And second, does your state charge sales tax on shipping and handling? You can click this article over here to check that if your state is one or not. I live in Oregon. We don't have sales tax, so I'm going to leave that unchecked. Last, if you participate in Etsy offsite ads or something similar, you can put the percentage here of sales that will come through those ads. So it's typically a low percentage on Etsy. I'm going to put 5%. I'm participating in that. And that's just going to mean that I'm going to pay an additional fee on 5% of my orders. Next, you can add up to 11 different sales channels where you're selling your products. So for our bakery, different products are going to be sold different ways. But for now, we'll come back and change this later. We're going to sell through these 3 sales channels. So in-person, cash, credit card, and on Etsy. So I'm going to put in here that we get 10% of our sales are paid with cash, 50% are sale through in-person credit card, and then our 40% on Etsy. Hoping to really expand that as part of the business. And then here you can calculate and add your real fees, either percentage, transaction fees, processing fees, by percentage or flat. Etsy's got your listing fee. There's that offsite percentage. So if you're a big store on Etsy, you might put 12% there, but I'm at 15% for now. And this is going to take a weighted average and pop that down here. So this is your average fees for all your transactions. Okay, next. And remember, you can always come back and edit this if you want. So next we'll go to the concept. So this is a place to do brainstorming for products. If you buy this template on Etsy, you'll get a PDF version already formatted for printing. So you can answer questions about your product and kind of think it through. Think where you're going to sell it, who's going to want to buy it, why they're going to want to buy it. And you can type comparison products down here. So we'll put one down here. So it's going to be another t-shirt. This is sold by a competitor. They sell it for $25. Can make any notes or descriptions here. These will feed through later. This will feed through to another section. This is just, again, for your notes while you're developing the product. Some products, you might come up with and knock them out in an evening. Other products you might want to have gestate and think about them for months. And so this is designed to help you through that process. Developing a product is a recursive process. Usually you want to take a wide picture, then narrow down on details, and then once you figure that out, pull back out from there. And rinse and repeat until you got something you're really satisfied with. The spreadsheet kind of follows a similar philosophy. You might enter costs to start, enter an initial price, enter some scenarios, and get all the way to launch evaluation. And maybe you're not meeting your goals. Maybe the numbers aren't looking right. You can go back and change things and kind of rinse and repeat until you're happy with it. All right, next, understand your product costs. So this template handles 3 different kinds of products. It's designed to do one product at a time. I forgot to say that earlier. So you're going to kind of go through it and make it for a single product. In our case, we're actually going to do cookies. So that's like a handcrafted. We'll come back later and do a resale and a print-on-demand product as well. I recommend coming over here to File and making a copy and saving a copy for each of the products that you're developing. All right, for this example, we're going to make a batch of cookies, and that batch makes 24 cookies for the whole thing, 2 sheets of 12. The first ingredient we have over here is butter, 1 cup, and we use one of those. And cost per part, so if I know what stick of butter, or it should be a stick, not a cup. If I know what, usually these come in 4 packs. So if a pack of butter costs $3.99 and there's 4 per pack, that's $1. If it's something that's a little hard to, add up, like $3.79, maybe 95 cents. So you can use this over here to calculate what to put in here if you're not sure. So this is the point, we put that 95 cents. Waste and uncertainty is if you think you'd have spillage or other waste, or you're not sure, maybe some measurements are imprecise, and you want a little bit of a buffer, you would add a percentage here. I'm going to put 0 for this because this is already coming pre-measured. Sugar, we got 1 cup, and we're going to say that's $1.10 a cup, and there's 2% uncertainty. So it's going to add 2% to that cost. Next, we have vanilla. And we're going to use 2 of those. And for this, I bought a big bottle of vanilla. So I got 40. That comes with about 100 teaspoons. So I got 40 cents each. So it's going to multiply it out there. If you're interested in a product to help you manage your recipes and other product pricing, check out my recipe and price manager. That's also on the Etsy shop. Next, we got flour. We got 1 cup. It's the unit. We're going to use 3 of those at a time. So I have a bag of flour, costs $12.99, and it comes with 10 pounds of flour. It's $1.30, and we put 3% waste for that. Next, we got baking soda. And at this point, I think I'm going to speed up the video. Slow down here and say that for cookie packaging, these are little bags with ties. There's 24 of them for a batch of 24. Last but not least, I always recommend adding in your labor. So labor is often the most expensive part of your business. And when you get started, it feels less valuable, but as you grow your business, or especially if you already have to pay employees or pay friends to help or whatever, you're gonna want to take that into account. So to make this batch of cookies, I'm going to say it takes about 20 minutes. So, you can always type in equations here if you'd like, or use, if you don't want to use this calculator over here. So just to get 1/3 in there a bit more cleanly. And I'm just going to say this costs me $25 an hour. And so that's going to add that. You can put what you think your labor is worth here. That's going to be pretty subjective. If you're self-employed, don't forget to add in all the FICA and other taxes you may owe. This is going to be your gross cost, not your take-home cost. Last, don't be afraid if you forget something from this video to reference the instructions. I also have a little note down here about how to think about product development and capital costs. Just because those aren't included on this spreadsheet, they're much more important on the digital product spreadsheet, but it's still good to keep in mind. All right, next, we'll go to the pricing. So here, I'm gonna start off by pricing my cookie at $3. We're gonna see how that works out. I'm not gonna do shipping at all. Right now, we're gonna price this as it is an in-store product. So if there's no shipping, we don't cost anything to pay, or that the customer pays, $0. In this case, I'm actually going to go back, turn Etsy off. You always want to make sure this adds up to 100%. So just unchecking this doesn't delete this percentage. You have to just hit a 0 and then this will go away. So that gives me a better sense for what my in-store fees are. Next, scenario parameters. So in this scenario, we're going to compare no shipping cost. We're not going to do any shipping at all. So there's no free shipping. You can leave this blank or hit no. And we can add discount. So this might be a way to see what's my profitability if I want to run a sale. So for the first scenario, I'll say no. For the second scenario, I'll say yes, and I'll do a 15% discount. Maybe I have a coupon, and I want to make sure that if someone uses the coupon, that my cookies are still profitable. Next, here you enter the percentage of orders with certain quantities. So if people, buy a lot of cookies at once, you might have numbers down here. If they only ever buy one cookie at a time, here. So let's start with 50, 40, 5. And I think the discount might lead people to buy some more cookies. So I'm going to say 45, 40, 10, and 5. And 5%. There we go. So this again, like before, if you don't have enough percentage, and it's going to give you a warning down there to make sure you're at 100%. And last, what's my profit goal for this product? This is pretty subjective, but what it's going to do is if I want to say make $500 from this cookie, it's going to come over here and under each scenario tell us how many items do we need to sell and how many orders based on a weighted average of these numbers do we need to have. And this is less important for in-person, I think, than it would be for online orders, which we'll look at in a little bit. So as you can see, obviously, with the discount, it's going to be more profitable. However, maybe this assumption's wrong. Maybe I'm going to sell way more cookies in orders, bigger orders. And you can see now that even though our profit margin is still lower, and we still have to sell more cookies to make our $500 profit, we do so in fewer transactions. And maybe that's valuable to us because it saves our staff time. And then over here on the right, there's a detail page. So you can see kind of the profit margins, how it breaks down for quantities sold. Again, we'll get to this. This will make more sense when we look at free shipping options. And last, if you're curious what your rates are for how much you're paying for different types of transactions, you can reference this down here. And then if you want to check if it's, in this case, it's not really different between those scenarios, but if it was, you can pick which scenario it's applying to. And step 4 is the advertising and marketing budget. So for this, you can set a budget and measure your performance for cost per click advertising, cost per milli advertising. This is like YouTube, if you're advertising on video or based on a visual impression instead of a click. Can add in a budget for marketing materials and any affiliate marketing if we do any of that. So for this, for our cookie, we're not selling this online right now. So we're going to ignore that. Here though, I want to run a promotion. We're going to go with scenario 2 here, I think. And we're going to run a promotion where we're going to distribute our coupons in a local newspaper or magazine. And so that's going to cost $150. And we can come back, and if we end up spending more money for some reason, we can enter the actual here. Okay, step 5 is the pre-launch checklist. This is to make sure that you haven't forgotten anything. And this is also good to run through maybe when you're in early stages of the product development and you want to really interrogate your product. Think about, have you tested it with friends or family? In our cookie example, maybe want to make a couple batches and give them out and get feedback. See if it's too salty. See if they like the kind of chocolate chip you're using. Things like that. Check for vulnerabilities for vendors. If you are using a special kind of flour and the store that you buy it from runs out, do you have a backup? Are you violating trademark policies with your packaging? Have you budgeted sufficient amounts for advertising and marketing? And that's very subjective. And I have little notes over here to help you think those kind of questions through. We're not going to read through all these, and there's plenty of room here for you to enter your own as you go. And so you can either use this digital version. Again, there's a printable version of this as well, pre-formatted for you to print out and handwrite your tasks as you do your product development, and then check them off before you launch your product. Okay, next, finally, step 6 is launch. So as we said, we're going to run scenario 2 on this one. And for this launch date is when do I want to start this cookie? So this is going to be a summer special. So we're going to run it on the June 15th. This year is 2024. Evaluation dates. This is going to be again subjective. You'll put when you want to evaluate. So I'm hoping to make most of my sales for this cookie during the summer. So we'll put the 24th there. This you can always come back and change later, as we'll talk about a bit, to evaluate different periods. But I do like to set a good period, at least 3 months for most products, to give them time to breathe and make sure you're not rushing any conclusions. Once you've entered actual data, you'll come back and fill this in. For now, we're going to leave it blank. This is a dashboard, which won't start filling in until we have actual data. But we want to fill our goal in. So I want to sell, let's go back to our pricing model here. So I want to make $500, 300 cookies. I'm going to make 400 cookies, my goal. So our goal is 400 cookies. And my goal here is to, kind of sell a lot of cookies per order. And so again, how many transactions is that going to be? I'm going to put 150. And so this will fill in, it'll give you some goals per day to measure yourself against, how you're doing, and then estimate profit margins. It'll also take into account your advertising budget. So here we have a gross profit of 464, but after the advertising, we still got a nice healthy margin for about 49%. And that calculates that all here for you to reference. All right, so let's fast forward. It's midsummer. We want to do an evaluation of how we're doing. So I've got data through mid-July, and now you'll see that this will start to fill in to see like how we're doing as against our goal. So it's about a third of the way through the summer. So this is bars fills out about a third of the way. So far we've sold 100 of our cookies. So 35 orders. So we're not doing well. We're underperforming so far into this. Revenue, you would pull that from your actual revenue, what the balance is between discounted cookies and non-discounted cookies. In this case, I'm just going to say, I think it was 255 for a discounted cookie times 100. That's our revenue. Shipping revenue, we don't have any. That's fine. No costs. This auto calculates your fees. So again, remember we filled in our fees on the setup here. And so that's gonna bring those in, gonna estimate costs of goods sold based on the costs, and give, so we're performing well. Our margins are actually pretty high. That's because we haven't, so we've actually spent our 150 already. So that's already done. We've hit that budget, but that's basically breaking even now. We've just basically paid for our marketing budget midway through the summer. All right. So we might take this information to decide, okay, we gotta maybe improve how we're displaying the cookies or describing them to our customers and try to boost some sales. And you can come back. You can also look at different metrics. So if we want to look at gross profit, you can see we're just trailing our goal. Net profit, though, we're way behind our goal. Because again, that's including our money we spent on marketing. And you can come back anytime and fill this in later. So if we want to enter data for when it's over, and hopefully our strategies worked. We improved how we were selling things. It took more orders than we thought it would to get to that revenue. Here, because of more orders, people weren't buying as many cookies at once, but they were probably at a higher price point. As the coupons kind of ran out from the initial batch during the summer. So that was our revenue. Again, no shipping. kind of came out well ahead thanks to that higher margin. And that's something maybe we can remember for next time, is maybe 15% discount was too much. Maybe just 10% would be enough. You can kind of look at this and hopefully learn from your experiences. So that's our first example. Now I'm going to reset the page and go back, and we're going to do a different kind of product. Okay, for this comparison now, we're going to be selling one of our branded t-shirts. We've got a catchy name, and we'd like to sell that on our new Etsy shop, where we're also going to be selling packs of cookies. So I've entered 3 competitor t-shirts, just kind of reference information so it flows through later. And we're also going to come back here, and since this product, we're going to sell an in-store version of it, but for now we're going to do the print-on-demand version. And so that's 100% sold on Etsy. So we're going to come back to our cost section and change that to print-on-demand. We'll delete that now. We don't need that there anymore. And we're only going to use one dropshipper. We're going to use Printful. I've never dropped it before, but I've heard of that one. This one's going to be a men's t-shirt. And let's say that we're going to, we're going to sell women's and men's and kids t-shirts in a certain ratio. We don't want them to all be the same price though, but the cost is slightly different. So we're going to say women's t-shirt and kids t-shirt. And you could run these 3 separately. If you'd like, you can just run a scenario for just kids, because that's the cheapest, and maybe you want to sell that at a slightly lower price. But I just want to show you how this anticipated use works. And so this is going to cost us $11.40. This is going to cost us $11.10, and this is going to cost us $8.90. And so I'm going to say, going to sell 40% men's shirts, 40% women's, and 20% kids. And so our average cost per shirt is now calculated here at $10.78. You can also use this anticipated cost if you use multiple drop shippers for the same item as maybe backup shippers, or you sell them in different countries and they print in different countries. You can use this as well to, again, average out your costs per shirt. If this isn't equal 100%, maybe you typo something, this will tell you as well that you're wrong. And this needs to be 100%. All right, next, so then we're going to go back to our pricing. So do a different profit goal for this one. Now you can see our average competitor pricing is at 25. I think 25 is a good place to start. We're just going to go with that, be really competitive. Packaging and shipping costs for the first t-shirt. So this is the little bag we sell it in plus shipping. It's going to be $5.50. And for each subsequent shirt, we can just stuff more in a bag, and it doesn't cost as much, but it's going to cost, let's say it's cost $1.80 more per shirt every time we buy a shirt. So if someone buys 2 shirts, it's going to cost $7.30. 3 shirts, it's going to cost $9.10, etc. So what the customer pays, I'm only going to have the customer, I'm going to pay $6 for the first shirt. They can buy more shirts for more shipping. And so this is, if they're paying for shipping, this is what will count there. Both of our scenarios, it's 100% online. We're not selling any shirts in store. I want to compare some things here. So for one scenario, free shipping, one without. We'll make the free shipping cutoff be $49. So if someone buys 2 shirts, they get shipping for free. I think it works at 52. You could do it 50. It's as long as it matches that. 49 looks better, I think. This scenario, though, I want to add discount. We're not going to have a discount here. This scenario, I'm going to have a 15% discount on all the shirts. And again, different strategies for, we want to see what impact does this strategy have on our margins? And you might want to run these differently. You might still want to run both of these. See, maybe one of them is slightly lower margin, but way more effective in terms of marketing. But it's good to understand what your margins are when you're running those kind of promotions. Again, scenarios number for order. I'm going to suppose here that we're going to do a 50-50 for that. And then this, we'll do a 40-40-20. Or no, we're cutoff is there. So actually, we're going to assume it's actually like 20 here, and then like 70 here and 10 there. Something like that. All right. So next is profit goal. We're going to do $1,000 I'd like to make from this. And again, like before, it's giving us a scenario, results of scenario, and details over here. And here you can see why this is kind of helpful, because you can see our margins for the discounted shirt are all kind of low. It's about 25%. It drops actually a little bit because of the way we're charging for shipping. As more people buy, we only get $6 of shipping revenue, but our subsequent items. So I'm just going to add a $2 charge there. that boosts that up to a nice 30%. And then scenario 2, we can see that our margin drops off quite a bit when we sell that second shirt. So we're not getting them paid for shipping, and then it slowly climbs back up. But because there's no discount, it's all quite a bit higher than over here. So you can see the results here is that this shirt performs a lot better. And I think I like the idea there of that. So we're going to run a scenario 2 for the rest of this. And now down here, you can also see how much you're paying Etsy. This is the estimate of that. And again, this is based on the ads as well. So let's go back to our sets. You can see. Let's suppose the worst case scenario that we're going to sell a bunch of our shirts, but they're going to make us pay more for them. Let's say 20% of our orders come in that way. What happens? And now you can see it bumps up a decent amount, but it's still tolerable. And our margins take a little bit of a hit, but nothing too bad. Next, advertising. So I'm going to run a cost per click campaign for this one. So I want to budget how many orders do I think will be sold cost per click. So again, my goal is to make $1,000. It's going to take 65 orders using this scenario. So I'm going to assume that I want 30 of them to come from my campaign. Next, enter the number of clicks that you think it'll take to get to that number. I'm going to say 600. That gives us a 5% conversion rate. I don't know if that's good or bad. You might have better familiarity with it than I do. We're going to go with that for now. And I'm going to estimate a cost per click average of 18 cents. And then that many clicks there. You can also just set a total amount here. You don't have to do the math there. Say that I want to spend $200. And now, your cost per click here is going up, but if they perform better, then you'll overperform this estimate. It's also going to give you a cost per order down here for these 30 orders. So in this case, I can see that it's going to cost me $6.67. I can reference back here. See my profits per order are well above that. Most of my orders, I'm assuming, are going to be people are going to be taking advantage of free shipping. And so it's a significant chunk, but we'll see on the launch evaluation stage next how much that has an impact. We're going to scenario 2. I'm going to launch this on June 1st, and we're going to run this through the end of the year. Next, I want to add in what my goal is. So again, you can reference back to your pricing, see what our goal was. I think I want to try to aim for a bit higher than that. So we'll do 150 units sold over 85 orders. And next, at any point after that, you can come back and enter evaluation dates. Maybe I want to see how I'm doing after a month of sales. So, this isn't necessarily the date you're entering the data. It's the date the data runs through. So maybe I'm entering this in early July, but I have my data that runs through the end of June. And we're doing pretty well. We sold 50. We're actually blowing things out of the water. Shirt's doing really well. It was over 50 orders. We're not selling as many per order as we thought. Profits, we're going to save $2,000 of revenue. Shipping revenue, we're doing free shipping again. So that's 0. And here, for shipping costs, you would reference your accounting data. How much did you actually spend on shipping? We'll do that there. Roughly corresponding to the number of orders. So that makes sense. Fees, that's calculating based on our Etsy fees. Same with cost of goods sold. And giving us our profit margin. Next, let's check in on our advertising campaign. So far, we've gotten 10 orders from cost per click campaign. This shows you the difference for the whole period, not the month we're evaluating. We've got a ways to go in our budget. Clicks, 250 clicks. I actually spent quite a bit on this. Let's just look at how this looks if we spent more than we were expecting. You can see our cost per click is higher than we thought it would be. Our conversion rate's lower. And we're spending quite a bit more on per order than we tried to. And so if we go back to our evaluation, you can kind of see that reflected in that cost per unit here. Another important thing to note is these difference percentages here aren't the difference between our goal and the actual like they are on our advertising budget, but they're showing how well we're doing on our per day rates. So obviously this is a third of this. It's not 33% though, it's 144% because 1.7 divided by 0.7. That's where this number is coming from. So we can see that we're well ahead of our expectations here. And that means no matter when you're entering your data, just kind of like this, it shows that you're ahead of your goals. Okay, we're going to run through one more quick example. We're going to actually leave most of this here because it's pretty similar if we want to do a resale. In this case, we have a print-on-demand provider that's sending out our online orders. But we also purchased bulk shirts for sale at our brick and mortar store. So for that, we're going to want to use the resale option. It's very similar to the POD, except that we're going to want to list maybe first vendors and secondary vendors. So maybe we have ABC Co. We're going to buy our shirts from them pretty much all the time because it's bulk. We get them for a bit less, and we buy our shirts from them 80% of the time. And then we got a backup company, and they cost a bit more, and we're going to use them 20% of the time. And so that gives us an average weight. That way, we're taking into account higher costs for all of our sales, not just relying on the best case scenario. We're pricing in our worst case scenario as well. And so now we can see at $25, which we still want to have, our margins are quite a bit better. Shirts cost a bit more. We're not going to do any shipping. The one thing you might want to do at this point when you start a new product is, again, go back to a clean copy. You can always edit, but you can also make as many copies as you'd like and have each of them be kind of their own scenario. And we're going to go back to our setup. We're no longer selling this shirt on Etsy, so we're not paying Etsy fees. And we're not shipping orders. And we'll look at a discount. Maybe I want to see what things look like at these different price levels. So at the higher price, I'm going to assume you're buying fewer shirts at a time. Maybe I'm hoping that by a lower price, people will buy a few more at a time. Or maybe I'll look at this as a buy two, get one 50% off kind of thing. And so the math isn't quite right here, but you can play around with the discount percentage to get it to be what you'd like. And you can see here that obviously lower margin, but maybe we can assume something more like that. So the margin's so much lower in this scenario that our profit per order is even less, even though we're selling a lot more single items than duplicate. So maybe we wouldn't want to do that. Maybe we'll just stick with scenario one and carry that through. Again, we can do a marketing campaign if we want. We don't have to for this one. Again, choose which scenario we want and enter our goals, just like we did for the first product. So print on demand and resale are fairly similar in that way. And again, thanks for joining me. This has been a review of our price and profit calculator. Eagle and Pelican is the name of the company. We have a store on Etsy, website coming soon, eagleandpelican.com. By the time you're hearing this, it might be up. Also, leave a comment if there's a spreadsheet you want to see me make. I have a few more in the cooker, but if there's something that someone wants me to make, I will prioritize that. When you're listening to this, some of these may be out, but we have an inventory manager and a couple accounting tools and budgeting tools in development. So go ahead and subscribe if you want to learn more about those. And thanks for watching.